Let's say Japan issues $1 billion of yen, buys $1 billion of Bitcoin. If they're smart, they would issue $20 billion of yen, buy $20 billion of Bitcoin. When they put out the press release, Bitcoin would triple. They would have $60 billion of treasury assets appreciating at 30% a year. And they would end up with a $20 billion positive balance of payments, right? And it becomes a self-fulfilling prophecy. This last week, you saw Block announce that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world. And they're all in a marketing war with each other, and so they're going to go harder.
If you thought BlackRock and MicroStrategy were big, just wait. Countries are going to be coming for your Bitcoin. This is the latest outlook from Michael Saylor, executive chairman and co-founder, in his recent interview. Saylor broke down what he believes will be the next phase of Bitcoin adoption. According to him, we are at a pivotal moment in the global economy, with major economies such as Japan facing unprecedented financial troubles. Japan has accumulated so much debt over the past few decades that they are stuck between a rock and a hard place. Despite high inflation, they cannot raise interest rates, otherwise, they won't be able to service that debt. This situation has caused the Japanese yen to fall to multi-decade lows, serving as a warning for the United States and other countries around the world. Saylor believes the solution to this problem is clear. Nations can print fiat money and use it to purchase Bitcoin, a reserve asset that is only going to increase in value over time. So, forget massive financial institutions like BlackRock. Eventually, countries will come for Bitcoin. However, make sure to stick around until the end of the video, where Saylor explains why, before this happens, other companies similar to MicroStrategy in the Russell 2000 will adopt a Bitcoin strategy.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
The answer is the first country that can print currency and buy Bitcoin wins. A mid-sized country could probably do it, but you'd have to be aggressive. If we come back to a company, a company's stock is just like a country's currency. Right? The country can issue currency. By the way, the reason El Salvador isn't quite synonymous is El Salvador doesn't have their own currency. So what I said, the first country to print their own currency and buy Bitcoin wins. You need to be able to issue $10 billion of your currency, swap it for $10 billion of Bitcoin, grow the Bitcoin 30% a year. And that's the way a treasury reserve asset's supposed to work, right? Because everybody then stampedes into that with you. MicroStrategy had a $600 million enterprise value, and we had $600 million in cash, and we had no growth, and we were dead money, and we were trading $2 million a day in the stock market, guy. That's just like the Russell 2000, or let's say the Russell 1000, the bottom Russell 1000 companies. They're all like that. They're all 500 million to multi-billion dollar companies, 100 million to billion dollar market caps. They all trade 1 million to 20 million a day. They've all got low growth because if you're not Nvidia or Apple or the Magnificent Seven, you just, you can't grow like Microsoft. So we took that Russell 2000 small cap company. We took our cash. We bought some Bitcoin. We bought 250 million of Bitcoin. We put that out on the wire. The shareholder base turned over. We bought another 175 million of Bitcoin. The stock doubled. All of our employees exercised some stock options. We bought more Bitcoin. Stock increased again. We sold a convertible bond. We bought more Bitcoin. The stock increased again. Bitcoin increased again. You fast forward 44 months, and the stock price 10x'd. The market cap 20x'd, the enterprise value 40x'd. It went from 600 million to mid 25 billion. And so what were we doing? What we were doing is we're issuing our currency, our stock that is, to buy Bitcoin, or we're borrowing against our stock to buy Bitcoin. A nation state could do it too, but we're being far too ambitious to call for the nation state to do it. A much more prosaic, a much more practical next step is, how about for the 1,000 Russell 2000 companies that are all dead money and zombie companies? How about they start doing it? And Japan is saddled with a lot of those zombie companies as well. So the issue really is thousands and thousands of corporations that have dead treasuries because their capital asset on their treasury has a negative real yield. If you hold $1 billion and you put it in T-bills, your after-tax yield's 3%, the cost of capital is 12%. Bitcoin's return has been 40+%, but Bitcoin will almost certainly always outperform the S&P index. So Bitcoin does double the S&P index and the T-bill does a fourth of the S&P index. The real conundrum here is that the capital asset of the world, of every family, every institution, well, actually every corporation, every government, the capital asset is dilutive and not accretive. A lot of institutional investors and families, they know this instinctively. You'll never find a Wall Street hedge fund master of the universe that brags that his strategy is hold cash and T-bills. Like that's not how they got rich, right? And so normally the perversity is the shareholders are screaming at Apple and Meta, and they're saying, hey, you guys need to give us back the capital via buyback because you're going to hold T-bills, and the T-bills are not going to beat the cost of capital. And so we see that with Berkshire Hathaway. They got $190 billion of cash, right? And you see Apple going to do a $100 billion buyback and Meta a $50 billion buyback. Well, they're decapitalizing. And what are the people that receive the capital going to do with the capital? Well, they're definitely not investing it in the stuff that those corporations would have invested in. They're going to invest it in at worst, the S&P index, right? That's the default. And if you can't do that, you're destroying capital. So my advice to a sovereign wealth fund is, you basically start to buy Bitcoin as digital capital. My advice to an aggressive small country, if you're small, mid-sized country and you can print your own currency, you either print the currency to buy Bitcoin or you issue sovereign debt and swap it right into Bitcoin immediately, right? You can borrow money cheap and you loan it to Bitcoin at 24% return or better, right? So that's obvious, but I'm not going to hold my breath on countries because it's a very political thing. I think that the people that are the obvious beneficiaries that hopefully are listening to this podcast would be shareholders, officers, and directors of the 10,000 small, mid-sized companies, especially publicly traded companies, which in essence can't outperform the Magnificent Seven. If you don't think you can outperform Google and Meta and Microsoft and Nvidia, and you have some money, you either take the cash and buy Bitcoin, you issue equity and buy Bitcoin, or you issue debt, either senior debt, or even better, you issue convertible debt, convertible to your equity, and you buy Bitcoin, because that allows you to recapitalize with an appreciating asset, as opposed to decapitalize and have nothing, or to hold capital in a depreciating asset that is kind of burning, has got a negative real yield and burning shareholder value. We'll keep adding, right? I mean, we'll keep adding Bitcoin. It's like asking, if you were asking, a real estate developer in the middle of New York City, oh, you own like 8 blocks of New York City.
When do you stop? Right.
When do you stop? The answer, well, we're going to buy the 9th block here when we can put together the financing, and then the 10th. And if you said, well, when are you going to divest from New York City? The answer is, if you talk to New Yorkers, there's nowhere better than New York City. So they're going to keep building. And when they can't build out, they're going to build up, right? And, it's like, well, I wanted to buy another 18 blocks, but I can't. So I rezoned the blocks I own, and I'm going to replace a 20-story building with a 100-story building. And there's Hudson Yards for you, or whatever it might be. MicroStrategy is going to keep developing its Bitcoin position. And it's going to get exponentially harder, right? This last week, you saw You saw Block announce that they're going to start buying Bitcoin every month. You've seen accretion of Bitcoin by a lot of Bitcoin miners. A lot of them are actually not selling as much Bitcoin as they're mining now. I think you're going to see more Bitcoin miners buying more. I think you're going to see more Bitcoin exchanges buying more. I think you see the existing ETFs accumulating, but now we're up to 22 spot ETFs in the world, and they're all in a marketing war with each other, and so they're going to go harder. So I think, and at some point you're going to see these Russell 1000 companies, right? Which one of them wants to crawl out of their zombie state? It's like you're just waiting for someone to decide they want the money. So I think that when they do that, they drive up the price of Bitcoin, and I have to chase it. My first Bitcoins were below 10,000, and and I'm buying Bitcoin in the 60s now, and that's okay. I don't know where we'll get to. I know we'll get more. We'll accrete from here. We will acquire more Bitcoin than we have right now, and we'll do it via organic cash and via debt, especially convertible debt, and we'll do it via equity, and that'll be a function of capital markets and all sorts of other dynamics. But I think Archimedes said, you give me a lever long enough and a place to stand, I can move the world. Well, the place to stand is Bitcoin, right? I mean, it's not a commodity, it's a scarcity. So if it's a scarcity, it's like if I said to you, there's one city, it's at the trade crossroads of the world. It's the center of the digital economy. One day, everybody on the planet's going to be moving their capital through that city, but there's only 276 by 276 by 276 blocks in that city. And by the way, it's like 94% occupied, but you can buy another one of those blocks if you want. Do you want to buy some more? And the answer is, yeah, I want to keep buying, because just like if I could have bought New York or Manhattan 100 years ago, or 50, or 200, or 30, or 300, tell me, at what year, how many years ago was it a bad idea, right? I think it's always been a good idea. If you can hold, right? As long as you can hold the property. And why is Manhattan a good idea? Because it's a granite island at the middle of Long Island Sound and the Hudson, and it's got great natural harbors. It's the gateway to North America. It was always the best place to put a port, right? And if you look at it and you cruise around it and you stare at it and you look at the fact you can build that on top of that schist, it's obvious people are going to want to live in and do business in that city for hundreds of years.
Michael Saylor has explained why he will never stop buying Bitcoin, emphasizing that if you thought financial giants like BlackRock and MicroStrategy were major players, just wait, soon, countries will be entering the mix. This transformative shift, as highlighted by Saylor, marks a pivotal moment in our global economy. The unprecedented financial troubles of major economies, such as Japan, have set the stage for this change. Japan's massive debt has trapped it between high inflation and unserviceable interest rates, causing the yen to plummet to multi-decade lows. This situation serves as a warning for the United States and other countries around the world. Saylor believes the solution to this problem is clear. Nations can print fiat money and use it to purchase Bitcoin, a reserve asset that is only going to increase in value over time. This strategy, he argues, will be the logical next step for countries facing economic instability. While the idea of nations adopting Bitcoin might seem far-fetched, Saylor contends that it's an inevitable progression. Forget massive financial institutions like BlackRock. Eventually, countries will come for Bitcoin, driven by the need to find a stable and appreciating asset in the face of fiat currency devaluation. Before nations make this leap, however, companies in the Russell 2000 are likely to adopt a Bitcoin strategy first. These smaller, yet significant, players will pave the way for broader adoption, demonstrating the practicality and benefits of holding Bitcoin as a reserve asset. Stay tuned for more insights from Saylor on this upcoming wave of adoption and how it will reshape the global financial landscape. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.